Good morning, Predicted Trades family. Hope everybody's doing well. Let's see. For a quick review, we had our FOMC yesterday, where we popped up and then just stayed in between key levels at 47.71, 40.87. And then when FOMC came out, we dumped quickly through that 40.71. And you had to move quick, but to scalp those puts on the way down before FOMC hit. I did call out the 395 put on SPY at about 55 cents. Those got up to about $2 in this drop for a full 4x. We did, make a nice bounce back to that 40.71 and then came right back to close around this daily 200. Then let's see, overnight we basically tried to hold in that range from yesterday's low and the daily 200, but we're starting to slip lower now since about 3 a.m. We just set some new pre-market lows. Overall right now, ES trying to hold the daily 21. We do have a little bit of more economic data coming out today. We've got our jobless claims, retail sales, manufacturing data, and then a little bit more manufacturing data all coming out before the bell. So we'll get to see in a few minutes how they respond to this unemployment, this jobless claims and retail sales and manufacturing data. And then tomorrow we've got some PMI flash around at 9:45 right after the bell. So let's see today if they're going to use this economic data drop to pop us higher or send us lower below the daily 21. And basically we should maybe start to get a little bit more idea of where they're taking it after this data drop. It could be that they're taking it lower right now, pre-market, and then when this data drops, they're going to pop us right back up into the ranges we tried to hold near the end of the day yesterday. So we just have that one PMI tomorrow, a little light. And then looking into next week, got a little bit of housing data Monday, Tuesday. A little bit of consumer confidence. Wednesday, Thursday we have initial jobless claims and GDP. So that'll kind of be the big one next week, along with PCE on Friday and some income and spending data. Also have that University of Michigan around 10 a.m. So next Thursday and next week is pretty light, and next Thursday and Friday, the big key days going into Christmas. And then we'll just have 1 week of the year left. So, where can we go today? Let's see if the jobs data that's coming out starts to bounce us back up. We are in between the daily 21 here at this 39.80. The daily 200 up at that 40.35, and our daily 8, daily 15 right in between around 4,000. So the question is, can we hold the daily 21, start to work our way back up through the moving averages to get above the daily 200 and take out this trend line from highs? Or are we going to slip below these daily moving averages, start to reject them, and retrace lower, the big key levels, getting back down to 39.41, 39.22, 3900. If we look, we do, last spot that we held was around that 3900, 3922 zone. And our daily squeeze has now established the bottom right near those lows. The daily 50 slowly coming up to meet this 38.78. And that 38.78 is also kind of the start of the gap from the last CPI report, right? Our last CPI gave us this kind of a reaction. We had a gap up and we kept going. That 38.78 kind of marks the start of the top of that gap, and we haven't gotten back to test that yet. So, just talking about downside targets, the daily 50 is slowly catching up to that 38.78. You know, basically this 38.78, 3900 has kind of been the base where big money has been comfortable going long. And they've defended it and gone long. So, right now, that's kind of the line on the sand for, let's just say, the rest of the year. That we should hold that support, kind of the floor that big money has been okay defending and going long from. And now that we've gotten through our CPI FOMC, we have to see if they're going to establish some higher lows and start to push higher, or if we're going to come back to retest this floor that we've made. As you can see from the last drop and test of this floor, we started a little uptrend, and now we are getting close to testing that near that 39.61. You can see that we're in a big wedge from that last test at the lows and these recent highs. So overall, if this was just profit taking to load long again, we should see them try to hold this 39.61, hold this daily 21, and start to push back up to take out this trend line and get back to these highs. Not necessarily saying all of that happens today. Today could just be a defend and settle kind of day, where we're in between that daily 21, that daily 200, and you know, they'll start to pop it and then bring it back, and start to pop it and bring it back while they load into longs to try to run back up and take out trend line. Or it could be a kind of a day where we just can't get going. They keep slipping a hair lower, and maybe they're loading short to come back to this floor. Overall, we are in this daily squeeze going into the end of the year. We've gone pretty much from the bottom. We have fully engaged the top, and now we're on a drift back towards that bottom. We just have to see if they're going to bounce at something like this trend line at these key levels, setting a higher low on the daily, or if they're going to let go of that support and just bring it right back down to test a double bottom or head lower. Looks like we're starting to get our reaction from that 8:30 data. It did give us a pop at first. And let's just drop down to a... Actually, I can do it over here. Drop to a 1 minute. Actually, I'll drop to a 3 minute. So yeah, we'll keep an eye on this just to see if we keep slipping lower, if we're going to try to defend and open near this daily 21, or if we actually start a little climb back in the hour we have until market opens. Let's go into NQ. So, I mean, hopefully you guys saw, just drew a quick trend line from these lows. And you can see that's exactly where we're trying to hold right now. So we've got a key level, this 11,677. We've got our trend line from the lows from last week. We have our daily 21 here. Plenty of support to try to hold us up and bounce us back up to test trend line from highs. And even though we have more extreme candles during the cash session, you know, can't ignore this overall trend line from pre-market from both days, pushing us down. So, overall, let's see if we can hold this base that we're trying to hold pre-market around this key level, around this trend line, the daily 21. Start to work our way back above 11,800, take out trend line from highs, and try to fight back to 12,000. Or we reject, start to lose the support that we're trying to hold, which would then send us back down to that 11,500 and the daily 50 right near the bottom of this daily squeeze. We're pretty much right in the middle, being at the daily 21, in the middle of a daily squeeze. So we have to see, are they going to defend, and start to ramp up? Or lose it, reject, lose it, reject, and start to head down. Going on to the ready. Ready already made it back to the daily 50 last week. So now trying to hold it up again. Want to see the ready hold this daily 50 and establish that higher low. Right, we got down to 1795. So if we can hold around this 1810 daily 50, setting that higher low and start to move back up to our moving averages above and get through trend lines from highs. And the goal to get back to this daily 200 and get back up to this daily squeeze top. But if we start to lose this daily 50, going to retest 1800 and the bottom of this daily squeeze, which spans down to 1780 in the middle. Moving on, ready. So kind of the same thing. We've got the daily 21 sitting just below on ready at that big key level of 33,800. If we can hold there, looking to get back up to 34,000 where the daily 8, daily 15 sit. Try to get above that and then recapture back up to where we were yesterday. But if we continue to remain weak, we give out this daily 21 and that 33,800. Then we are likely heading back to 33,500. 450, last week's lows, and then through that down to this daily squeeze bottom, which spans, 33,300 down to 33,000, big key psych level. So let's see if, daily 21s can support ES and YM. And if we can start to get back above key levels, to start mounting a drive to recapture where we were. Apple. So if you look left, where we're trying to settle around this 141 is where we bounced, and where we bounced, where we bounced. So looking for this 141 to try to hold us up. If we start to lose that, it's down to 140, last week's low, and then that 139, 138 zone below, down on the bottom of this daily squeeze. But if we can continue to defend this 141, we're going to get back up above this pre-market high, around 143, and complete that journey back to 144.5, 145, where all of the daily moving averages are stacked. I talked about this yesterday, how I think it was even during this midday pullback, I said Apple's holding all of these daily moving averages. As long as we hold there, good spot to go long, where she got back to high day. And then in that CPI, she immediately gave it out, so that's your sign to go short. where she dropped from 145 down to 141. It happened fast, and options were a little elevated yesterday, so you had to move fast and pay a little more than normal. But overall, let's see if we can hold that 141. We got our targets to the downside. If not, and if we can hold, looking to get back to that 143 and this zone above. AMD already setting new lows compared to last week, about to arrive at that daily 50 and this key level 65.5. So looking for a hold right around the 66 and to try to work our way back up to fill the gap and then get back to 70, 71 where the daily 21 sits. But if we're just going to keep slipping on the market like we're already doing, looking like we might arrive at 39.61 before we open. If we keep slipping through that 66, 65.5, then it's down to 64.5 where that second Keltner sits, and then down to 62, 61.5 where that third Keltner sits. Amazon. So holding up well above last week's lows. Let's see if this 2-hour squeeze bottom around 89, 89.5 can provide support. If we can hold there, looking to bounce up to 91, 92 to fill the gap. And many past that, back to that daily 21, 93.3. And top of this 2-hour squeeze around 94.5. But if we keep slipping, likely coming back to test 88, 87.5, and 87 at the bottom of this daily squeeze. BA. Overall, still holding up well. Basically looking for it to hold 185 today. If we start to give that out, you know, it's where we've bounced this week after running up on Monday. So if we start to give out that 185, she could quickly engulf Monday's price action back to this 180. So let's see if we can hold up to that 185. You know, we do have that daily 8 at about 183, right in between that 185 and 180. So she could slip down to the squeeze bottom in that daily 8 and still catch a bounce. Giving out that daily 8 increases the chance of getting back to 180. Cat. Let's see, we got the daily 21 and this 2-hour squeeze bottom right at about 230. So looking to hold 230 today, start to work its way back up to fill the gap back to 234.5, 235. And if we can get going past that, back to the top of these squeezes at 238. If we start to give out that 230, then it's back to 228, 225 at the bottom of this daily squeeze. Google. Down in between our zones. So if we keep slipping, let's see if 92, 91.5 recent lows can hold us to set a double bottom and start working our way back up. If we can get going to the upside, looking to get back to this 95, 96, where all of the daily moving averages sit. But if we do keep slipping, it's 92, 91.5, 91, and then down to our next zone at that 89.5, 89. GS. Gapping down to new lows, almost at that daily 50. So let's see if GS wants to complete the journey down to this 350, down to this daily 50 to try to base and work its way back up. Below that, it's 345 at 343, where the third Keltner sits to the downside. Meta. Silly strong yesterday, got back to that 123. Now pulling back below Tuesday's low, pre-market. If it keeps slipping, daily 8 below at 118-ish, and then the daily 50, daily 21, from 116.5 down to 115.5. Those are downside targets for Meta. And then back to this 113.5. If we can hold any of these daily moving averages, looking to try to bounce back up to get back above 120 and back to this 123. But just looking at the range of the week, we started around 113, got up to 123, 118 is kind of right in the middle with these daily moving averages. It is a quad witch week, so it could be that we just come back and settle right in the middle of the weekly range. Microsoft holding up very well. Looking like we're going to open around 255. So let's see if it's going to, if we're going to continue to slip down. Kind of looking for this daily 8 around 252 to hold at the bottom of this 2-hour squeeze. Should that start to give out, or 252, 250, looking for that to try to hold Microsoft up, to bounce us back up to at least fill the gap to 258, get back to 260, 263.5, where the daily 200 sits up at the top of these squeezes. But if we start to give out that 251, 250, the daily 21 sits back at 247. Our recent lows at 242, and the daily 50 is now caught up to this key zone we have at 240, 241. Has some downside targets if we are going to continue this downtrend and start going back on the market to retest, the base that we have set. Netflix capping down hard to 300 and right near last week's lows. Let's see if 300 can provide support. Looking to get back above 305, 307. And even to get back to fill the gap would be pretty far. I'm wondering if she has news or something that came out. Take a quick look over in our stock news channel. Sorry, just taking a quick scan through here to see if there's any specific news to Netflix, maybe like an upgrade or a downgrade. Oh well. I am seeing get a number of downgrades though this morning, so definitely something to look at in our stock news channel. If we start to lose that 300, then it's back to 295, 290. NVIDIA. NVIDIA making it back to the daily 8 and daily 200 around this 172. If we start to lose that 172, 170 coming down to the daily 21 around that 165. But if we can hold up here and start to get going back over that daily 200 at 174 and this psych level of 175, back to fill the gap, looking to get back up to 180, 185, and recent highs. But yeah, we have a good base set here from 170 on Friday and on Monday. Let's see if we can hold that. If it starts to give out, then we're talking about engulfing Thursday to get back to that daily 21. QQQ. So we're arriving back to where we were bouncing Friday and Monday. Let's see if that can hold us. Basically 181 to 182, right? If we start to lose that, or sorry, 281 to 282. We start to lose that, down to 280, down to 278, where the daily 50 sits at the bottom of the squeeze. But if we can hold up, looking to get back to 285 above, back to fill the gap, 286.5. All of our daily moving averages are here. If we can hold all those and start to push, then it's back to 290, trying to get back to where we were yesterday. But if, selling sentiment is just picking up, then our downside targets are back to that daily 50 to the squeeze bottom. Moving on, SPX. I'm going to be gapping down about 50, 60 points. So going to be back down near these lows. Let's see if 39.30 can provide support. It's kind of where we bounced, where we consolidated, gapped up, came back to test, and came back for one more test. So let's see if that 39.30 can provide support to start to bounce us back up to the daily moving averages above and back up to fill the gap near 4,000. If we give out that 39.30, then it's to these recent lows and down to the squeeze bottom at 3,900. The daily 50 sits down at 38.60, which looks like it's back near that CPI gap. Yeah. So daily 50 also catching up to the top of that CPI gap on SPX, just like on ES. For downside targets, if we just keep breaking down. SPY. Well, all about this zone, 392.5 up to 393.5. We can hold here, looking to get back above 395, and start to try to work our way back up to moving averages moving averages above. The daily 21 sits around this 396.5. And we closed around 399, so getting back up to 399.5, 400 would be filling the gap. So let's see if we can find any support here and start to work back through our key levels. If we just keep slipping, next spot 390, big key level, and that 388.5 right at the bottom of this daily squeeze. Tesla. Just heading lower, getting near this big key psych level of 150, and at the bottom of the third Keltner. And the third Keltner to the downside is right near that 150. If we keep slipping, my next big key target is 136.5-ish. But it's starting to get a little bit into that oversold territory. Let's see if we can hold 150, get back above 155, 160 to get back to our zone above. We're right in the middle of that zone and the next lower level with this 150 psych level right in between. So let's see if we can hold 150, start to scoop back up. If we give out 150 and start to reject and head down, not saying it all either scenario happens completely today. As you can see, Tesla not really making big moves, just kind of trading in tight little ranges on a slow grind down. So not necessarily saying we go to visit either of these today, but if we can start to hold, it could set up the drive back up into tomorrow if we start to break down and the whole market is just continuing to slip, that's kind of your next target. UVXY. So, I like that it's approaching at about this 7.1, this 2-hour squeeze top. So for a bounce and upside in the market to try to get back to fill gap, looking for UVXY to reject this squeeze top, get back below 7, and come back to fill the gap back to this 6.8. But if we're going to keep slipping, UVXY will likely stay above 7, start to get above 710, and maybe up near yesterday's highs around 720, 730. On to VIX. Interesting, interesting. So even with this sizable gap down, VIX is not taking off. It's not, I mean, I would have kind of expected it to get back above 22 and near this 22.5, but not that big of a gap up. So, on VIX today, for upside in the market, it's kind of all about this 22, this pre-market high. Would like to see VIX stay below that and start to roll over back to 21 and lower. Just kind of confirming that volatility would be leaving and they might be loading long into the end of the year. But if we're going to continue to slip on the market and continue lower, like daily 50s or daily squeeze bottoms, then we'll likely see VIX get above 22, back above 22.5, and start to make a drive up to that 23, 23.3 where we topped out. Basically making a W. If VIX starts to take off, market will slip. But if we can roll over and make that H, then market could catch a nice recovery bounce today. So hopefully this was helpful for everybody. It is Thursday, which is a free day in our room where you can come in and test out our tech on your options charts if you're new to predicted trades. You can join our server for free. There's a link in the description. So definitely come join us this Thursday and every Thursday to test out our tech before you sign up. It'll work on your options charts and help provide key levels. For instance, the 395 put that I called out yesterday held our beast zone at 55 cents, ran up to $2. That's the whole goal with our system on your options charts, is it's trying to identify key calculated levels in advance. So you get these levels. I've already delivered the tools this morning, so you could already be loading up your charts and starting to look at where the beast zones are, where our buy zones are on each option strike, and kind of start to plan out your trade. And so definitely come check us out if you're new to predicted trades. Thanks for tuning in. Good luck today, everybody, and we'll see you in the chat.